I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody. This is Brock Shimano. Today is Thursday the 20th, and we had the markets moving a bit lower here except for soybeans. Let's take a look at corn for May, trading down 9 1/4 cents at the end of the day. Soybeans trading up 2 1/2 cents at 14.33 3/4, and wheat in Chicago trading down 12 cents with Kansas City wheat trading down 6 1/4. We did have export sales out this morning. Brock, how did they look?
You know, it wasn't really a special report by any means for corn, soybeans, and wheat here. Corn did come in on the high end of expectations. If you take a look at this table here, soybeans came in right within analyst expectations, and wheat was right within analyst expectations as well. So slightly supported for corn in the early going. Soybeans did have a nice pop after the export inspection or export sales came out this morning. And I think a lot of what was going on there is that there's been some rumors recently that we're going to see some Chinese cancellations. We might see net cancellations for the week on export sales. We actually got a pretty decent total for sales, about 200,000 metric tons. But I think that gave the soybean market a little bit of fuel to move higher. We approached those highs that we saw here about a week ago, around 14.60. You ended up hitting 14.56.5 was the high we hit today.
Absolutely. Let's take a look at the chart here, and what you'll notice on the left we have a daily chart, and each one of these candles represents 1 day worth of price activity. You'll notice that we were able to trade up to those highs around that 14.60 area before we started selling off. Now, the chart on the right here is a 5-minute chart. Each one of these bars represents a 5-minute period during today's trading session. You'll notice that earlier on we were off to the races trading higher, but by the middle of the day we were trading down pretty sharply. And really by the end of the day we were near the lows and also kind of near where we opened up. And I think really the main thing to take away here is that by the end of the day it seems as though the bears were a little bit more in control here than the bulls were earlier on in the day.
You know, we did end up positive, just up a couple of cents, but I'm taking a look at the range, and then we're, you know, ending up only 2 cents where we were previously up about 20 cents. You know, I think some bear technicians out there are going to look at that as a signal that this rally could be running out of steam here. You know, we've rallied pretty substantially the previous 2 days, and all week long we've actually had a pretty decent rally as well. So, you know, if we get a little bit of selling tomorrow, I think that could have signaled that we are poised to move a little bit lower and probably head down towards those lows we saw late last week.
And some of the news here supporting that kind of a movement is the fact that we see a major Chinese soy buyer potentially selling 4 to 5 cargoes of Brazilian soybeans into the U.S. Now that, you know, we were talking about cancellations, you were talking about that a little earlier. We were expecting Chinese cancellations, didn't get them, but instead we start getting talks of selling Brazilian beans into American soil. That should put a little bit of a damper on the rally that we've seen. That's almost as good as a cancellation, and it is a bit concerning here when you look at prices. I think one of the reasons why we ended up trading lower here at the end of the day.
You know, we did see some technical selling up towards those levels in soybeans, but I think you know, another market that saw some technical selling today was the wheat market. You know, wheat has had a substantial rally over the last month and a half. Today we hit a high around 723.5, which is the highest point we've seen since June 26th of last year. A lot of that's been aided by some dry weather conditions down in the southern plains, some of the political situations going on in the Black Sea region. But today we saw substantial selling come across the board, especially in the wheat market. That $7 support level did hold here today. We'll have to see if it holds out tomorrow as well.
And the weather models, when they updated today, it also showed a slightly more a wetter scenario in the 11 to 15 day forecast. I think that's one of the reasons also why we did see a little bit of the selling come off the board. I know that we rallied pretty sharply due to concerns about the dryness throughout much of the plains. That changed today. You know, we got a little bit more favorable weather pattern, and I think that's one of the reasons why we saw a little bit of that selling in the wheat market. Other than that, guys, today's show wraps up here. If you have any questions about what we talked about, give us a call at 877-472-4607. Remember, you can take a demo of the mobile trading platform at grainhedge.com. I recommend you do so. It is a very easy to use platform. It's going to be nice when you're out planting to be able to keep an eye on your positions and keep an eye on the market as it moves. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.